All right, everybody, let's get going. Welcome to this evening's webinar, the ACY Securities Live Forex Market Review. Before we move along, if you can read through the disclaimer. If you're on our YouTube live stream, I can't see the chat. So if you're chatting to me, I can't see it. So I can't answer any questions, but I've given you a link. Just register at the link and come into the room and you can ask me as many questions as you like. Other than that, everybody, please read through this disclaimer before we move along. And if you're in Australia, it's Happy Australia Day today. Hopefully you've had a barbecue, you've been down the beach, had some fun, enjoyed the sun. And if you're not in Australia, well, hopefully you've been having a good day anyway. All right, so let's move along. If you don't know me, my name is Duncan Cooper. I'm a Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time trader. Been trading the Forex market now for more than 15 years. Been mentoring clients in the Forex market for more than 10. If you want to contact me, my email's on the screen, duncan.cooper@acy.com. Through the week, you can catch me at our website on the Market News tab, acy.com Market News, YouTube channel, ACY Securities Australia. You can catch me on my Twitter and LinkedIn handles there. And as well in our Telegram channel through the week. I'm providing analysis and updates, and just contact Nathan if you want access to that, if you don't have access. And if you want access to my chart layouts and templates, just ask Nathan too. I'll put his details in the chat now. All right, that's in the chat. Now, what I wanted to say was, I'm seeing some new faces on the webinar, but I'm also seeing obviously some regular faces there. If you've got friends and family that are interested in trading, webinars are free. So invite them along, see whether they like trading or not. No obligation. All right, so feel free to share the webinar links out. Love to see a few more people coming in. All right, now let's get into, first of all, the news for the night or the rest of the week. So time is showing Queensland time, so 11:30 p.m. my time, Queensland time. We have US advanced GDP coming out. And then tomorrow, same time, Friday, 11:30 p.m., we've got the US core PCE price index. Okay, so a couple of items that could affect the market. So be aware of those. Market's a little bit, well, it's been having a bid to the US dollar, but over the last 15 minutes, it's been selling off. So it has been moving up. It's a little bit range bound at the moment on some of the pairs. So we'll get to, where are we? My price action charts. And we'll start with the dollar index. And as I was saying, some pairs aren't doing much at the moment. They're just keeping it a very to the US dollar, very fraction bid. And here's a dollar index. You can see that from maybe the last 2 weeks here, nearly week and a half at least. It's not making it. So we've had, that's today. So 1, 2, 3, 4, 5, 6 trading days, a bit over a week. We had this rejection down here, a little bit short of this weekly low here. And whilst we're still negative, we're still lower tops and bottoms, that kind of formation still there. Not really going anywhere for the past week. All right, it's a bit of a holding pattern. Is that a bottom coming in, or is it just a pause before more decline? But at the moment, just need to understand we are a little bit flat at the moment. And on the S&P 500, so dollar has definitely got still a sell bias to it. To the S&P 500 here at the moment, it's moving back up this range. It is wanting to hold above the 4,000 level, but trend is really mixed. If you go to the weekly chart to find your bigger directional trend, we have a lower top, higher bottom. So, you know, where's the long-term trend going to be going over the next 4 weeks? So it's difficult to tell. So it is from week to week at the moment, obviously well, I say obviously, we made a fresh high last week to the week before, but we finished negative. We're obviously making a fresh high this week to last week. So just over the weeks, we are moving up the range, but we have a lower top, higher bottom. So what is happening? The monthly trend, longer term trend here is down. So I'm going to favor that on the day chart and just have a fib in the direction of the longer term trend, which is the monthly trend, and just monitor, is it going to come up to the 79% level? There's a bit of a resistance level to the left there that we hit 3 days ago. It's not doing much, it's not going very far. A bit like the dollar index at the moment. So in a bit of a holding pattern. All right. Now, let's have a look at the pound dollar. If you caught my webinar yesterday, I was doing market structure. Now I had, and price was down here when I did it. So I had no idea that price would get up there. All right. But I don't need to know if price is going to get to a very good level. All I need to know is where are the good levels to trade from, and then price might get there, and then I might have to get busy at that area. So hopefully, if you were with me last night, you may have taken advantage of this area up here. But let's just go through it. Question is, are we going to hold at this weekly top here and make a double top? It's a 62% level of last year's trading range. Been discussing this now since, I don't know, December, early December. Would we hold and fail at this level? So we may today, it all depends how the day runs. I've come up, there's a very minuscule double top here to this weekly double top. There's also a minuscule kind of left shoulder head. We're forming a little right shoulder here. Come up just before the webinar to touch the 62% level of last year's trading range. And I was discussing yesterday structure. We're at obviously strong weekly resistance, and we have some 4-hour tops here that have been forming resistance. Just highlighting the area of 3 tops up there. And I said yesterday, we may fail up there. We are failing at the moment. And we've failed at the 79% level. So this is really a structure trade. It's also a 79% retracement failure at the moment. Anticipating, I put this in the Telegram today. I was discussing the idea that we could fail at the 79% level, move back below 12400 to trade down to 122.10 in the short term. All right, so still plenty of time to get on board that if you want. You can't get the best price, but there's still lots of room down if we're going to be moving down. 50-minute chart over the last half an hour, 45 minutes, we've spiked up, back down to the low of the day at the moment. Okay. All right. Now, might go left and then just keep moving to the right. Now, the Aussie yen, we've got the weekly chart. We retraced yesterday on the very high inflation data up to what is weekly resistance here, 92.59. And that pretty much overlaps with the 62% retracement level. Okay. So that's this area. That's the weekly level just there. It's 92.59. We're pretty much at, and the 62 levels at 92.40, and pretty much trading at that level right now. So yesterday we went up, hit the resistance level, traded above the 62. Today, are we just coming up to the 62 to hold? Because what I'm anticipating is, well, if we do fail there, then we've moved down, we've rallied up, and are we going to move down this way long term? We're going to put in another lower top in that area for then a move down through supports. All right. Now the daily trend here is actually up, but it's a significant weekly area to watch. The 4-hour chart, and if you draw in a fib from the range of last month, the 79% level of that range pretty much is where we're at right now as well. So there's an overlapping fib area there. I just took the liberty of taking that fib just beyond last month's high to that swing point. All right, but if I did on the low, so on the high, which is the next candle, it's within a couple of pips. So I'm just using the swing top there. Okay, so we have overlapping fibs here with the 79% area of last month's trading range. And 2 or 3 weeks ago, I was discussing that level when price was doing all this meandering through here. I was saying, watch this 79% level. So are we going to fail there? Now, as we're coming up today, is this, I know this 4-hour is in an uptrend in terms of bottoms and tops, but is that heavily sold off yesterday? Is this coming up to put a lower top in at this area to move down? We draw a fib in across that range. We can drop it down to the 15-minute chart. You'll see that we're at we're in between 62 and the 79 level of that range yesterday. Now, before I came on, I was watching and looking. There was a bit of an imbalance here that got formed yesterday, and we've actually come up today to fill it. So we may well see a topping out process intraday in that area. You can monitor that to see whether you can start to see it turn over. We could go up higher to the 79% level. We could go up higher to retest 92.59 today. All right, so at the moment, this 15-minute chart's in an uptrend. So it's a question of monitoring. Can you see maybe a trend line break to the downside? Can it put in a lower top on the 4-hour chart and turn over, okay? All right, so you can monitor that. So I'm just looking to see if we are failing at the 92.59 and the 62% level of the weekly range. Are we in that area where we could be putting in a weekly lower top? Is the 4-hour chart going to hold up here and turn over back to the downside? In any event, I'm not looking to buy because I'm at a known level of quantifiable resistance from a higher time frame there. So I'm not going to buy into resistance. But if I can see a setup to sell, it might be logical to sell in that area, okay? Aussie dollar. Now, this is in an uptrend. I did a video in Telegram today, but it's not what I want to buy, okay? Because we're at monthly, weekly resistance here. So on the monthly chart, this is all corrective rally up to a 62% level at the moment. That's at 70.91. We're fractionally above there at the moment. Got monthly resistance here, old low at 71.86. We're 6 pips above. And on the weekly chart, we have a top here. And the question is, will we hold here at that weekly top area? So we have tried to move up to that top today. I think we put in a fractional higher high today just than yesterday. In fact, I think we tested the high twice, and then over the last hour, we've been selling off. So are we going to hold here and turn down? All right, as I said, the trend is up on the daily. There's no question about that. So if you are trading here to the downside, it is counter to the daily trend at the moment. So you have a choice of, I wouldn't be buying here because you're at resistance. If we're going to buy, I'd need to see a dip first. Look to buy on a dip. Because at the moment, this is overextended. And of course, going short's counter trend to the daily at the moment, but you are at a very good level of resistance. So you just need to work out. I've been watching for a clear break below 71. So what I'm watching for is a clear break below 71 and a retest of 71 to look for a short. All right, at the moment, it's just holding fractionally above that monthly level. To me, that doesn't mean to say we've broken it. We're just dealing around there at the moment, okay? Because we've been above, below, below, back above. All right. So watch 71.06 up to 71.37 where we're trading in at the moment. All right, that's not an area where I want to buy. It's a resistance area. But if we start to turn down from that area, I'm going to look for a short. So it's a question of monitoring price to see what he wants to do. You could, if you want to be really aggressive, is watch up here at 71.37. You see a 50-minute rejection. You might want to short that, but safe to wait for a break, a clear break, start to see a clear breakdown, I think, there. Does 71 become resistance? All right, Euro Yen, at the moment it's moving up. So here's a daily chart. It's very range bound. Pretty much trading at the moment, we're trading at last week's high. I've been watching all week for these high levels of resistance. So we're in a range here. There's a bottom of a range here. There's a bottom of a range here. There's this double top kind of affair up here. Can we come up to this area of resistance, hold and fail? All right, so for me at the moment, it's not quite in the perfect area where I'd like to initiate a trade. And we did have a nice sell-off back below last week's high yesterday. So depending on your viewpoint, I would prefer it to go up to that resistance level, but as we're just assessing what's been occurring over the last day, 62 level of, we dropped down, we're coming back up at the moment, 62 level overlaps with last week's high. So maybe that would be a good level to watch for failure intraday. You can watch that, see whether you can see a tight trend line break entry there. You see there at the moment, it's deliberating. Does it want to hold there today? Right, but as I say, I would much prefer up at these extreme high levels to be trading. All right, euro dollar, day chart, trend is up, okay. It's not the best pair at the moment. It's intraday keeps faking to the downside, but ultimately keeps putting in fresh highs. It is still high tops and bottoms here. The weekly chart is in an uptrend. In opposition, the monthly trend is down. So all this upward move that we're seeing at the moment, we're just moving above this low here at 108.79, monthly low there, 108.79. We're above that by 25 pips or so. In between the 62 and the 79 of last year's trading range. So I've been waiting for a monthly top to come in, but we keep moving up ever so slowly. Last week we had about 120 pip range. This week we've popped above last week's high, and we are holding to an uptrend. Okay, to be a buyer, I'd need to see a dip. I'm not gonna buy it up here. It's too high. And I am watching and waiting to see if the US dollar wants to put in the bottom and have a rally. So if that happens, I don't want to be getting caught short up at, sorry, I don't want to get caught long at such high levels. So not really seeing anything to do here at the moment. From an intraday dip perspective, we could come down to this top, 108.87. So we're down the 50-minute chart. This is this area down here. You see the price action today, it's just range bound. It's in a range of 22 pips, 25 pips max, okay? So it's doing nothing. Maybe it's just waiting for the US news. So at the moment, you know, I'm not trading that pair at the moment. It's just not offering anything that I like the look of. You may see a dip down today to 108.87. There's the monthly level of resistance or support. We're above it at the moment. So those two levels could offer support today, intraday, for a movement back up if we dip down. Long term, if we do see a reversal, we want to see price nicely move back below 108.79, which is that monthly level. But at the moment, we're clearly holding above, and we're clearly holding above 109. So over the next week, we may well see 109 become support for the market to move up to 1010. All right, it's kind of moving in a 100 and 120 pip range per week at the moment. I think it's not doing too much. It's just holding to the uptrend. Right, pound yen is coming back up today to retest 161.23. It's rather range bound. Fractional uptrends, rather range bound. So if you've got the feeling that we're going to hold in the range, we've already tested the high resistance level here, 161.23 already today. It's like it's been a fraction short of 7% retracement failure up here. Now, whether or not it can spike up there, see, resistance here, structure, failed here, tried to move above, failed back below. You should expect a retest of structure for failure. We have retested structure, fraction short the 79% level, fraction short the structure as well. So have we already put the top in for the day? So when the news comes out later in the day, you may see a spike up here. I'd be watching up here to see what price does if it spikes up there later in the day. All right, 161.23 up to 161.31. All right. So watch anywhere above 161 up to that area. You might see a tight trend line break to the downside. To the downside is probably the way to go, back down to support, maybe down here. All right. Now, of course, if we get over the next few days a clear break above this area, we could be heading all the way up to the top up here. But at the moment, it seems to be putting the brakes on and holding into this range that's been forming. So watch that. Of course, if the pound dollar has a very hefty sell-off, as it maybe is putting in a lower top up there, and as a hefty sell-off, that would obviously help drag the pound yen down, unless the dollar yen severely goes north. All right, and then it could just stay sideways, or the dollar yen goes north stronger than the pound dollar moving down, and the pound yen would move up. All right, New Zealand yen, very similar to what I'm just discussing on the pound yen. Very range bound. Failing again this week at 84.66. Another retest up here would be ideal to trade down from. And if you draw a fib in from high to low, 79% is just a fraction short of your resistance level. So that would be the perfect areas. It's 84.60 up to 84.66. Is it going to come up? For our trends in a downtrend here, just looking for a rally to finish. Failed at resistance, dropped to a downtrend, rally. That's what I would be anticipating. So watch that level up there, 84.60, 84.66. Right, New Zealand dollar. In the Telegram, I think it was yesterday, I put in, I was watching the 8,500 level. Today's high, 85.02. Sorry, not the 8,500 level, the 6,500 level. Today's high is 65.02. Okay. Let's just go through the time frames. Looks very much like the pound. All right. And the Aussie dollar is starting to look maybe like the pound and the New Zealand dollar. It's just catching up. So that's last year's trading range. Hanging around the 62 level. False broke this weekly top. Hit 65.27. I think we're a pip short of that this week. Are we forming a weekly double top? Are we forming a kind of a minor double top, lower top here? And I think I said yesterday, I really want to see this. Yes, fell at 65. It's falling at 65 today and have a nice close below 64.68, which is weekly resistance there, which is kind of acting as support at the moment. But that is a weekly resistance high. We're above it, so it can act as support. So we traded below it yesterday, but obviously popped back above. So it is offering some minor support at the moment. We really need a good shift back below there. And then the double top could start to maybe want to come to fruition. So for our chart, its structure, moving up from failing at resistance down to a lower bottom. When the news comes out later in the day, if it's got any more legs, 79% levels at 65.09 and resistance there at 65.13. So up at that high level up there, anywhere up here is a perfect area to expect failure. We might not get there. We may have already failed at the figure today, and we may be putting in a lower top there on the 4 hour to start to move down. All right. If this is a major topping out area, there's plenty of time to maybe get on board and take a position. But the high of the week this week, last week, high of the week was 2 pips above monthly resistance at 65.29. We're at 64.81. So you don't even have to risk 50 pips at the moment to sell now and put your stop above the high. So we're around about 50 pips. All right, it's not too large a risk, especially when, let me just get rid of that fib, especially when we're at a very possible major price point on the chart. We could be topping out this could be the high point for the year to move down to test the low of last year. So now is the time to make a decision on some of these pairs, because last 2 weeks, this week, last week, we're testing that weekly top. We are not wanting to move through it, and we can't get above. Did last week by 2 pips, that level of resistance there. So selling off as I'm talking it. So it does look like it may have put in an intraday top here, 6,500. It's moving down. Looking at my other charts on my other screen, Aussie dollar's just moving down to hit, just trading below 71 at the moment. All right. Right, dollar Canadian, it isn't doing much. I believe it's pair alone at the moment, but there's the potential of an inverted head and shoulder pattern forming here. It's not doing too much at the moment. It can't get much above 134 before just staying in the range down here. All right, but this could be the area where traders are buying. See on the 4 hour chart here, it's so consolidatory. This is probably consolidation for a move up of the area that's been forming all this base here. So we form this base here, popped up, back down to the base, forming another base at the 79% level. Looks very much like it's basing, getting ready to move up. The longer that consolidates before it moves, the stronger the move it's going to get. All right, so if you like the dollar Canadian, if we get another dip down into these lows on the 4 hour chart here, all these lows through here. So last week's low, that red line, 133.50. Down there's good buying at the moment. Market won't let the market go below there. So 135 could be a major bottoming area for the dollar Canadian over time for a long move up. But at the moment, it's very quiet, consolidatory. Large trends lead from long periods of consolidation. So it's consolidating. So don't be surprised if we get a strong break, but you really need to be in before the break. So if you like the dollar Canadian, watch the 133.50 level. Can you see price come down into that area to hold for a buy to move up? All right, dollar yen. not today, but the last 4 days, I've been trying to get above 130.40, which is this weekly low here. All right, so the weekly trend is still holding to down. It is holding above the 62 level of last year's trading range, but clearly the sellers are sitting at 130.40 and don't want price to move, above. Or it's moving above, but it doesn't want to close above at the moment. So I would just be waiting at the moment. We may put in a higher bottom here today. At the moment, we've got lower top, another lower top. Is this going to put a higher bottom in here? Now we really want to see these two tops here taken out. Then we'll have a clear picture of the trend there. Is it getting ready to turn around? At the moment, the trend's unarguably down. It's lower tops and lower bottoms, but it keeps going up and testing 130.40. I've got a feeling that we might break above there in due course, but for our chart look, it's forming a bit of a downtrend here at the moment. I mean, the line in the sand is 130.40, so if you fail at 130.40 today, that's a good level to look for a sell. All right. Been testing it all week. Keeps failing there all week. So that's your level to watch on the dollar yen. Does 130.40 keep holding as resistance? Can you get a tight entry at that level to trade down? Now, let's have a look at gold. And this is still going, well, so it's negative for the day. But the last 3 trading days, that 1920 level is major monthly high point from over here. So which we theoretically are wanting to move above at the moment, because whilst the monthly is down, and this could be heading towards the 79% level at 1972, the weekly's up, closed above 1920 last week, the daily's up. Last 3 trading days, it's been dipping below 1920. Last 4 days, we've traded at 1920. So the buyers are clearly supporting at the moment 1920. Now that we're above, they're supporting it. That's the line in the stand over the next few weeks, 1920, heading towards 1972. If we can't hold 1920, we're going to get reversal. At the moment, we're holding 1920. So the buyers are clearly holding that up and moving it up. Of course, though, today at the moment, we're on a negative candle, but the 3 days where we came down to test 1920, all those candles would have been negative at some point, but they all finished getting support at 1920, finishing strongish blue candles there, okay? So we could well dip back down to 1920 again today. That would be a level to watch for a buyer. All right. Watch 1920. That's the key buying area at the moment. You could also watch from the 79% fib down to 1920 area there. So 1926 down to 1920. Look for support down there intraday. All right, any questions? Everybody's a bit quiet today. Let's just see what's been going on as I've been talking. As I've been talking, the Aussie yen has just been putting in a lower top on the 15-minute chart. Aussie dollar, it's breaking the trend line. We're starting to fail up there. Even if we trade below 71 today, we may well see tomorrow. We may well come down today, but we may well see a retest. Let's say we do that today. We may well see a retest up to 71 tomorrow. So, because that's how the market kind of operates. It drops, it rallies, drops, rallies. So there's probably more than today's opportunity to sell here today. If we trade down today, we will probably rally back up to 71 for a test tomorrow. unless we heavily sell off today. But at the moment, we're just trading around 71 at the moment. Is it going to hold there? Or are we starting to erode through that trend line? And then you might see 71 become resistance through the trading day. Euro yen, well, it is failing at 62 level, last week's high. All right, euro dollar is moving down. So the 4-hour structure at the moment is in an uptrend. Just look until that 4-hour uptrend breaks to the downside. You have to look to trade to the upside within that 4-hour trend. So these support levels I was discussing before, very close to the 62 level. 62 levels at 108.84. Support levels at 108.87. The monthly levels at 108.79. Okay, so I wouldn't get too excited about shorting this until we break below the 4-hour low. Okay, if the 4-hour structure can break, and then maybe if we rally back up to 109 and hold, then okay, 109 might start to become resistance for a move down. But at the moment, pretty much trading at 109. So 109 could be support at the moment. Right, so the pound dollar. Back to that 4-hour look. It does not, there's a very negative 4-hour candle. We've got another 23 minutes before that 4-hour candle finishes. And we've already had, Cameron, you're on that. We've had a 4-hour entry there. Did you sort out your times on your candles? All right, so we've already had a 4-hour entry there. Break of that red candle low, stop above the high. And you're telling me you got on this one twice. All right. So there was actually a 4-hour entry over here at the start of the week. There was a 4-hour entry here to move down. And there's a 4-hour entry there at the moment to move down. In fact, that red candle probably gave you a 4-hour entry as well, which didn't work. But there was one there that worked. There was another one there that worked. There was one in here that would have worked to at least a break even. One here that failed, and there's one here that's triggered. All right, so not everyone's going to work. I don't know which one's going to work either. You just have to trade what you see. The market is always right. We're sometimes right. Sometimes we can, you are right, but you can get stopped out. That's just the way trading is. You just have to keep going. All right. If you're using a 4-hour entry, I wouldn't go to a 5-minute chart for a tighter stop because you'll just probably get taken out. If you're going to use a 5-minute stop, you need a 5-minute entry. That's what I would say to that. All right. Even a 15-minute in general terms is, if I'm going to take a 4-hour entry here, I'm going to use a 4-hour stop level. Okay. Having a tight stop doesn't mean this, just to me means that my stop's going to be too close to the market. Because what could happen with this 4-hour candle, right? Let me just draw a candle in. This 4-hour candle is going down at the moment. I see it, and I see this happen all the time. 4-hour candle goes down. And if you're taking 4-hour entry here, which is a break of the red candle to the left. So let me just put another candle in here. The 4-hour entry is there. Break of that candle low. Stop goes above there. Now, when that 4-hour candle finishes, what can happen on a 15-minute chart, draw a fib across that candle range. On a 15-minute chart, price can often then retrace back up to the 62 or the 79% level. So like I say, price trades back inside the candle range. It does the same exact thing in a 4-hour chart. So it can often come all the way back up then to the 79% level in that candle. And if you've got your stop too tight, you'll get taken out. Doesn't actually take out the top and then just trades down. So you end up with this 4-hour candle forms, finishes, the next candle can trade down, break the low, then it trades up, and then trades down and finishes at the low of the candle. And if you got your stop too tight, you just get taken out. And you're putting your stop at 124.47. Yeah, I'd have it a little. I'd probably go 10 pips above. Whatever the high point is, I'd go 10 pips above, just in case there's a retest of the high. I'd probably go 10 pips above. All right. That's the way I would do it, because we could come up for another test up here today. At the moment, all these tests that we're getting in this area are not taking out that top. So we could get another test. That could be the last test, but we could get another test. And if your stop's too tight, when the test comes, you get taken out, and then it turns around and you're going, what gives? Because I obviously don't know for 100% sure that the market is topping here long term, but it's forming resistance up here and it could be topping out for the long term. So if it is, I don't want to get taken out for the sake of 10 pips. I'd rather have my stop 10 pips above the high, give myself every chance to hold the trade if it wants to come up for a test. And then, because if you get taken out and then it goes the way you're anticipating and it becomes the best trade for the month or for the year, it's hard to bear at times, isn't it? So we'll just have to watch and wait and see. But yeah, don't get your stops too tight if you're using a 4-hour entry. It's the hardest thing in the world to have a wider stop and do nothing with the trade, especially if you're used to short-term trading and you're moving your stop all the time and getting the risk out as quick as you can. If you've already taken a 4-hour entry on that at the moment, you don't even need to look at it now. You've got your stop in place. All right, you need to have a level where you're going to take the risk out, and that's it. Other than that, the market's going to do its thing. If I actually traded up here, and I'm still short from up here, and I'm doing nothing at the moment. I got my stop above the high, and I'm waiting to be proved wrong. Okay, so as you're saying, it's all probabilities. I'm waiting for the market to prove me wrong, and I am wrong sometimes, and I'm right sometimes. At the moment, the market doesn't want to go above 124.47. All right. And when the news comes out later in the day, maybe it does, but at the moment it doesn't. So we'll wait and see. All right, what's that New Zealand doing? New Zealand is down 28 pips now from that level. So yesterday I was looking up here for the 65 level, and we've hit it today. And what's actually happened is today, let me get rid of that fib. Today we are, I can't get rid of the fib. All right, back to the day chart. Today what's happening is we've fractionally traded above yesterday's high. So what we're doing is false breaking yesterday's high, and we may well trade down. And what will happen there is the fact that we've moved above yesterday's high is we're putting a very micro lower top in on the right side here. We've got a lower top there and then a mini lower top forming here if we have the fact that we've had a day up. So if we do move down now from where we failed, so back to the 50-minute chart, that was yesterday's high here. And we just false broke it, hitting 65 level. And it's not the perfect looking, but there's a left shoulder there. That's like a double head. There's a right shoulder there. So from a structure point of view, it's giving you every signs of a reversal there at the moment. At your well-known level of daily, weekly resistance, monthly resistance up there, where all those double tops are forming. I just want to watch this, see what this Aussie yen's doing. So let me get rid of that fib. That's the range of yesterday, but I just want to take away that weekly range. Just monitoring. I've given you the lesson this month about the monthly ranges, the weekly ranges. When we did that lesson, which would have been 2 weeks ago. So there's last month's high. I've just put the fib on the high that was just above that level there, that swing point. But normally I would just go from last month's high to last month's low. There's the 79% level. All right, so think of that. That's the candle. Like I was just explaining on the 4-hour chart, there's last month's candle. All right, we're trading all the way back inside. So this month, wherever the month's low is, which is here, this is this month's candle forming in all that price action there. All right, and we often will fail. We'll often come up within the candle of the month before, fail at the 79% level, and then we trade all the way down to the 127 extension, which is 85.16. That's like 700 pips away. All right, so this is well worth planning a short here with limited risk for maximum gain. All right. Now, of course, I don't know if it's going to fail there. I never know it's going to fail when I take a trade. I'll do my technical analysis. I'm looking at my levels, I'm doing my work. All right. What I'm also noticing, I've got this all squashed in, but see this period of consolidation here. And then we break down. We've come all the way back up to a period of consolidation. That was this area here as well. So we could obviously move higher. That's why you put a stop in place. But to me, this is a high odds area for failure. And if it does fail up here, there's a very high odds that we will move back down, potentially to at least test the low of last month's level. Now we're almost at the end of last month. Sorry, we're almost at the end of this month. We're on the 26th. So where are we? I think Tuesday is the end of the month. All right. So if this does start to fail up here, come Tuesday, we could be at least halfway down the range, if not down to the bottom of the range. See how, last week we failed here and went all the way up to there. So this could get moving real quick if it really wants to. Don't know whether we can be at the bottom of the range come the end of the month, but we'll wait and see. Well, I have to wait and see whether I'm right first, but to my daily, I just want to put the back in the other fib. All right, so there's the overlapping fibs. We're touching it today. And at the moment, once we hit those two fibs, we're turning around. So you can monitor that, make a decision if you want to trade it or not. All right, any final questions? If there's no more questions, we might wind it up, call it a day, call it a week. Coming up next week, more analysis next Tuesday, the last day of the month. Then where are we? That's tonight. That's Tuesday next week. First day of the month, we'll review last month's trading, or last month's how price moved and operated, what patterns were forming, what structure was forming. I think it's great to do that, look at last month's trading and look at the structure that formed, make from hindsight, make your hindsight your forward sight over time. As I said in last night's video about market structure, if you can become a master of market structure, like I was just showing you there on the New Zealand dollar, where it's forming possibly a head and shoulder pattern. It's forming a head and shoulder pattern at structure where you'd expect, the market to fail at. So if you can become a demon at market structure, your trading will improve no end. All right, so we'll review that on next Wednesday and more live market analysis next Thursday. So other than that, thank you, Slav. You have a good weekend. For some of you, sure you're having today off, Australia Day, long weekend, Friday, Saturday, Sunday. I'm sure some of you are. My son is. I know you think I don't have a son that's old enough to work, but I do. He's almost 21. He's got a long weekend. All right, so that's what's coming out next week. If you've got the time, just come over to the webinar page and register your interest. And I look forward to seeing you then. Other than that, have a great weekend. Catch some sun if you can. It's very hot and sunny where I am at the moment. All right, have a great weekend. Thanks for turning out. Look forward to seeing you next time.